Chohan, what's your understanding? How much this particular reduced inflation has to add to this very bullish trend at the Pakistan Stock Exchange, crossing over 1,05,000 points today? And this particular bullish trend has continued in the recent past also. And do you expect, after this particular reduced inflation rate, there is likelihood, a highly likelihood of a reduced monetary policy rate in the coming days also? And how much does that give a boost to the overall investor confidence?
Absolutely. I think inflation is a crucial part of the puzzle in understanding the strong equity returns year to date that we have witnessed in the index in several parts. The first way that inflation has its reduction has impacted is that interest rates try to follow. Monetary policy is meant on the intent to adjust interest rates according to inflation. So as inflation has come down, interest rates have come down, but with a lag. And so as interest rates come down, then fixed income instruments, bonds, etc., government securities don't appear as attractive to investors because the yield adjusts downwards. The second way that it impacts is that as inflation comes down, earnings of companies tend to look better going forward in real terms, so inflation adjusted terms. So as companies' earnings are expected to be better, then that is priced into the stock market. So the fact that inflation is coming down is very, very important, and there's many reasons why we should expect the equity market to remain strong. But I always urge I don't give financial advice on television, nor should anybody else without the caution, but it is important to keep in mind the fundamentals and exercise judgment and keep the good vibes, the euphoria on one side, and look at the fundamentals of the market at the same time.
So how indicative, how much, when we talk about the depiction from this particular bullish trend at the Pakistan Stock Exchange, about the overall health of economy and the kind of efforts that have been put in by the authorities here in Pakistan, getting into the IMF loan program, trying in to bring in tough measures in order to stabilize the economy. Then we have seen this continuous bullish trend in the recent past of the Pakistan Stock Exchange. How much does that speak about it?
It is a reflection of it because the stock market's ebullience and strength reflects the fact that sentiment is strong because things are not as bad as people feared they might become, not just for Pakistan, but for frontier markets as a whole. There was a feeling that many of these countries would go through a really difficult time, and all of them have done quite well because we have realized that as global inflation reduces, things are not as bad as they feared. Kenya, as an example, Argentina, as another example. The stock markets have done very well in these countries because there was a very big doom and gloom in the sentiment in global equity markets, and fixed income was a bit too strong. There was too much money put into it because interest rates were high. So that is reflected. The other point that you've raised is that economic reforms have been taken, an agreement with the IMF was secured, and measures are being taken to implement that with strong political will. These are all good signs too, because what they do is they give you a sense that the economy's fundamentals over the long run will probably be better if the reforms are taken wholeheartedly to their fullest extent, and we won't have the kind of cyclicality that we have experienced, as my colleague was suggesting, that cyclicality in economics of Pakistan will not be so pronounced in the future, and rather it will be driven by stronger fundamentals. And all that said, as I understand, our stock market is one of the best in Asia, if not the best in Asia. But I don't know if you're willing to venture the assertion that we have the best economy in Asia. So there is something for that too in terms of measured sentiment.
Dr. Chauhan, what's your understanding if this particular trend at the Pakistan Stock Exchanges continues? Where do you see it in the next 6 months? Do you expect it to touch the mark of 200,000? And also, I was reading some very interesting distinction of this particular rally as compared to those that happened in the past also, that this rally began with an interest rates at an all-time high. How do you look at that?
Um, I'm hesitant to give a exact precise number. It may not touch 200K. That is a very high number. It would be double from where we are right now. But I would agree with my colleague that 150K in 3 months is very reasonable because the price to earnings ratio of this index as a whole has been very, very low, even compared to its historical. So if you even attain your previous history, keep in mind that that was also at a discount to similar indices in the region, I mean in Asia. So just to achieve a normal global standard of price to forward earnings, 1 year forward earnings would easily see this go to 150. There's nothing surprising about that. That would simply mean that your equity markets reflect a valuation that is in line with equities around the world. So that I can easily see happening. Beyond that, I agree with Doc Saab that it would require certain structural reforms. There might be more requirement, more demands from the investor class in this, that to see stronger signs, because at that point, interest rates would probably be priced in completely. They're already being priced in to some extent, and forward earnings of companies would also have to reflect strong growth, signifying that they are getting better. And if you look at the nature of our index, the KSC 100, 50% of it is just fertilizers and banks. So if you have strong agricultural signs, and if you have strong bank returns in an era of low interest rate, because perhaps their dividend yields are strong, perhaps they're charging fees from people, they're doing that sort of thing now already, then maybe you can see it go beyond 150. Otherwise, I think the euphoria will rise up till 150 just to attain a normalized multiple. And after that, you would need some stronger signs beyond just the immediate ones.
Okay, so Dr. Chauhan, what's your understanding as to how basically the retail investors should navigate through this current environment at the Pakistan stock exchanges? What should ideally be their priorities at this particular point in time?
Very, very good question. You see, right now the participation in our equity markets is actually lower than it was 20 years ago. So let's say 2007, there was 500K participants. Now it's about half that, probably slightly more than half. So what you will see now is, because people discuss the stock market, it is in the news, it is something, it does serve as a certain degree of a bellwether to an improving economy. Things are certainly not as bad as they seemed a year ago. More people will join in. And if you join in today, let's say you, Javed Tehami Saab, invest today, join the stock market now, and you see a rise from 100 to 150, it's 50% return. It's pretty good. Let's say you join at 120, then you have that decreased margin of gain. Those who saw this coming from 20K to 150K make the most. And at some point, if there is a turn, the amount of incremental gain people get is low. So this is a normal cycle. Depending on your timing of the market, you will gain a proportional return. Now, there's a mantra on Wall Street that it's not timing the market, it is time in the market. So rather than playing the timing game, you just spend a lot of time in the stock market, and you'll have better returns in the long run. I'm not sure that that is true for an equity market like Pakistan's, because actually timing the market may be the better case here. So as sentiment continues to remain high, people coming in will probably not make the same returns as those 200K investors that have been in this through this rise over the last, or let's say year to date, the last 11 months. So that's the difference. Now you will see different levels of gains from what is happening.
Right, Dr. Chauhan, and now a very important statement made by Finance Minister Mohammad Aurangzeb, reiterating Pakistan's commitment and dedication to implementing the IMF loan program, and also with the ongoing economic reforms and efforts to simplify the business process. How important and crucial it is to continue following that particular IMF program, the conditions associated with it, in order to keep the economy right on track. Also, and what's required, what should the authorities ideally be doing at this particular point in time, given the fact that we are in that IMF loan program, how the business environment could be simplified?
Absolutely. First of all, we should give credit to the finance minister for the hard work and the tough decisions that have had to be made over this last year. It required patience. There's a lot of criticism, but in the end, you see that these measures have worked, and the political will has been mustered. And so a lot of credit goes to the finance minister. Now we have to stay the course. There is no second doubt about that. What you can discuss is perhaps the extent to which things have to be be done within specific areas, because that was a deal negotiated in a time of acute financial distress at the beginning of 2024. The realities on the ground everywhere in the world are different now. So there are tactical level discussions that you could have at best, but strategically, you should stay the course on this. And I would like to see other bellwethers of the economy that are more inclusive or more representative of Pakistan than the stock market also do well. If the stock market has, let's say, 400,000 participants, that's just 400,000 participants. If you have, for example, a real estate market that is also booming, that involves a lot more people than 400,000 directly, but certainly indirectly in terms of people who own homes and their net worth rises because of their house holdings. And then even better would be that the Pak rupee strengthens on a free float basis. So not through design, but through competition in the international markets as a currency. I remember a time when it was very recently that it was 150 to a dollar. I remember a time when it was 100. I remember a time when it was 60 rupees to a dollar. If the rupee gets better, that helps every single person using the Pak rupee, which is 250 million people. That's a whole different order of magnitude than the stock market. And that's the only way to get there is through reform. So our bellwethers, one order of magnitude after another, should all improve, inshallah.
Okay, so the improvement in Pakistani rupee, the road to improvement in the value of Pakistani rupee, what's required for that?
Fundamentally, it is a question of the supply and demand of the rupee. And the demand for rupee has been fundamentally low because we don't export as much as we should. So now, and the supply of rupee has been extensive because of COVID stimulus, because of this money printing agenda that has existed for decades. It's not new. So if you curb those two, for example, you align the supply in a reasonable manner and don't use inflationary tools or monetary tools to stimulate, which has been a lesson of the past. We're not doing it now. And at the same time, you have strong export growth or a demand for your rupee abroad for other reasons, then you will see that the increase in the value of the rupee on a free float basis. So making your rupee valuable is what matters. And to do that, make sure that people not just here but abroad also really need the rupee. Export good stuff.
To what extent do we need to see that enhancement in the exports, both in terms of goods and services? In the recent past, we have seen the trend, owing to the efforts put in by the government, they show a trend of increase.
Yes, absolutely. Well, this is actually a very good measure of us looking at the economy and the stock market, one against the other, because the stock market is doing well, but many of the names listed on it, as I said to you, half of the index immediately, if you look at it as a circle, half of it is banks and fertilizers. Do your banks export much? No. Do your fertilizers export? Perhaps, but not really. Domestic oriented firms are doing well, but what about the export oriented ones? And that's where again the quality of earnings matters. What are they getting? And over time you're actually seeing remittances becoming a bigger source of foreign fund flows into Pakistan rather than FDI, which was mentioned earlier. So again, we look at how the economy is doing versus how the stock market is doing, and I want our exporters to do well. They will, because inflation is coming down. If energy reforms take place, their input costs should come down. If there's more money floating around for businesses rather than other non-productive uses, then that should also help exporters. So there are structural factors already favoring it, plus reforms are helping it. Plus I think they should do a good job as they expose themselves outwards into a competitive market, which is a regulatory issue which my colleagues have correctly mentioned.